Hi, this is Yeho. I'm migration trader, 8 to 6 a.m. Japan time. Let's take a look back at yesterday's market. The Nikkei closed at 47945 yen, up 4.75% from the previous day. A sharp rally and driven by the news that Takaichi was elected as the new LDB leader. The market seems to be pricing in massive fiscal spending and the expectation of further inflation ahead. Of course, policy optimism is part of it, but the move was quite large. The PL came in at 18.64 and EPS hit 2572 yen, possibly the highest level ever. The volatility index stayed elevated at 27.72. So even though hedges are likely in place, there's reacting more to the upside. In short, it feels like currency erosion. Money is floating out of the yen and into private assets. Japan's 30 years GDP yield spiked to 3.28%, reflecting concern over physical expansion and bond insurance. At the same time, coordination between the government and BOJ suggests an effort to contain yields, so the overall stance still feels monetarily accommodative. The market seems to be shifting from globalist phase into a nationalist investment phase, a kind of state-driven capitalism. The government is now preparing to invest heavily in AI infrastructure, and investors are reacting positively to that. Still, the question is how to fund it. At some point, the spending spirit will need to tighten. If physical expansion continues, we are likely to see higher interest rates and persistent inflation, but eventually a corporate tax hike may come into play. As AI boosts efficiency and cuts other costs, those savings some could be taxed more. He might also hear renewed debates and around capital gains and cash holding tax. Meanwhile, the yen has weakened and the drawn yen briefly touched 150. The balance between the weaker yen and the rising domestic price will test public tolerance. How the new administration manages inflation will be key in the coming months. In the US, and the S&P closed at 6740 point, with the VIX at 16.3, relatively calm. The PL remains high at 31.23. The 13-year Treasury yield rose slightly to 4.75% from 4.71%. Gold climbed 1.91% to $3961. Reflecting expressions of global physical expansion, the GVZ or Gold Volatility Index was at 19.51, still high. Bitcoin traded above 12000 and up 2.38%. So we are seeing a broad Takaichi rally across the set. Up to now, Japan's top rally was more of a Koizumi-style globalization rally, but this time, it's shifting into nationalist-driven Takaichi rally. How long it lasts? That's the real question. Unlike the early Abenomics era, Japan does not have much physical or monetary room left. Asset prices are already inflated. The biggest risk I see is a weakness in the real economy. Consumption is slowing and electricity demand in the US is also declining. A fiscal stimulus might temporarily lift money supply, but if inflation stays high, their purchasing power will shrink. That's the core risk ahead. Technically speaking, the Nikkei has opened at weekly gap between 45785 yen and 46949 yen and 46549 yen. That's a 9 or 1000 yen gap. It is worth keeping an eye on. So the key question now is how far can this Takaichi go? We'll keep watching closely. That's it all for today. For me, long but image. And I'll see you tomorrow. See you.